Well, President Trump's auto tariffs are set to take effect this week, with collections set to begin on April 3rd. As the duties are expected to raise prices, auto dealerships are gearing up to navigate cost-conscious buyers. Pohanka Automotive Group Chairman Jeffrey Pohanka joins us now to discuss. Jeff, it is great to see you. And I was reading, Jeff, you are actually a third-generation car dealer, Jeff. So you obviously, you know this business, Jeff. You know this market very well. I was curious, Jeff, what, if at all, you're seeing in terms of foot traffic? If there's been any differences in terms of foot traffic, Jeff, leading up to these tariffs? Do you have any sense that people are trying to get ahead of these tariffs?
Well, car sales right now are booming, not just here. I'm in Philadelphia at a dealer meeting and throughout the country with most products. And a lot of our dealerships in the Washington, D.C. metro area, and there's a lot of chaos going on in Washington. And those dealers are experiencing really good sales level. Can we attribute that to tariff? Perhaps as part of the equation. Most likely, yes. We don't know to what level, but there's a lot of concern in the auto industry and on consumers also too, the impact these tariffs would have on the auto business.
So how these, Jeff, you now have to think through how these tariffs can impact your business. How do you try to model that out? How do you try to navigate that, Jeff?
Well, we'll take the boost in car sales. There's a speculation that this will boost used car sales, people trying to avoid the tariffs. We don't know what the tariffs will be. They're going to be announced in the next day or so. And, I'm hopeful that there'll be some resolution to them. In their current form, as promised, if they're long lasting, they would be damaging to the auto industry and the car sales volume. Absolutely. I'm hoping, because they're very serious in terms of their impact with our trading partners and industry in general, that there will be concessions from our trading partners to lessen the damage that they could cause. This is a big picture. This is high stakes poker, and we have serious trade issues, and they have to be addressed. And certainly, the auto industry is a very important part or component of the world economy. And the president has identified automotive as a way to try to get maximum leverage to get concessions in general with our trading partners and to level the field, which in the long run might be beneficial to our economy.
I'm curious, Jeff, how many brands do you sell that are imports currently?
Well, what is an import now? I mean, General Motors sold more cars in China the past 10 years than in North America. So, it's a global economy. We have domestic brands, we have Japanese brands, we have Korean brands, we have European brands. We're a 106-year-old company. We have 23 dealerships, and we sell 11 different brands and multiples of some of those brands. So we're very diversified. Auto dealers are very adaptive to new environment. We've had a lot of shocks the past 10 years, and we'll be fine. We'll figure it out. But again, I think this is part of a global issue, and we're being used for maximum leverage. Look, if these things last for years as promised, it would be very difficult. You have two cars, one made in the United States, one with tariffs, and then the tariffs come off, and you're left with a high-priced car with a tariff on it, amounting to some thousands of dollars. How are you going to sell that car that's a tariff car versus a non-tariff car? So a lot of uncertainties that we'll have to face when the announcement comes out. I'm hoping the manufacturers will be slow to react and see what's actually happening and not pass these costs on initially, so they can see really this whole thing settles in or settles out. Are our trade partners going to negotiate and look at the big picture? Or are they going to fight back? I don't know the answer to that question.
Do those car makers, though, Jeff, do they have the margins to take that kind of hit? And if so, for how long?
No, a very strong company like Toyota can withstand. They've promised that they're going to hold off. A weakened company like Nissan will feel an immediate impact. So not everybody will be impacted the same way. And a lot depends upon where their parts come from, where their final assembly is. It's kind of a complicated matrix. Every manufacturer will be affected in some way, some fewer than others. If some don't produce any cars in the United States or use a lot of imported parts, they would be affected much more than others.
What are your inventories like right now, Jeff?
Well, actually, there's some shortages. I mean, demand has been pretty good, even before the last month with the tariffs. So, there's pent-up demand. Springtime, market's better. The average car is 13 years old. They don't last forever. And, it's right now business is good, but they could cool overnight.
Even before these tariffs, Jeff, the threat of these tariffs, what has affordability been like in the U.S. auto sector? How would you characterize it?
Well, affordability is definitely an issue, because of inflation, supply chain issues, and also the cost to transition to electrification. I believe gasoline cars are subsidizing a lot of this transition to electrification. One thing to look at globally is the different markets. These car manufacturers are global manufacturers. And I was in China a year ago in November, and looking at the market there, the Chinese market's 10 million more cars than the United States, new car markets, the biggest in the world. And the Chinese domestic manufacturers are pushing out all the other non-Chinese manufacturers. And that's been a very important market for many manufacturers in Europe, the United States, and Asia. And then you go to Europe, they're going 100% EV by 2035, which is impossible to achieve, but I'm sure the governments there will hold on as long as they can. And the United States is going to go eliminate all incentives, subsidies to EVs, and let the free market decide. These are all different markets. And now they have to deal with tariffs in the United States. So the manufacturers are really in between a rock and a hard place.
Jeff, really helpful insight and analysis there. Thanks so much for joining us today. Appreciate it.
Thanks for having me.